Welcome back to the show, everybody. Check these headlines out. We got BlackRock's Larry Fink talking about a digital world currency. We also have Jerome Powell talking about rapid changes to the global monetary system may affect the role of the US dollar, and so much more. The evidence is mounting, and we got it for you right here. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at Dig Perspectives at the top of the screen and everything that we're talking about here today. And give us a follow on TikTok as well. It will be Digital Perspectives, no spaces, lots of highlight reels and clips. Let me tell you about the highlights right here. 7% off in the last 24 hours for the cryptocurrency market cap. That's almost $100 billion vanishing from the crypto market cap, ladies and gentlemen, currently falling like a manhole cover from the sky. Bitcoin, 19,200, Ethereum, just over $1,000 at this point. Cardano's 46 cents at number 7, and number 8 spot is XRP at 30 cents. We're off by 19.5% on the 7-day. Range of price is between 30 cents on the bottom and 33 cents on the top. Before we get started, I believe I'm going to show you information that absolutely is starting to set the role and the tone and become a catalyst, these events, for XRP to be a bridge currency for the world, and it's 31 cents. Not financial advice, just my digital perspectives. Let's get started this morning. Take a look at this. This is Digital Chamber of Commerce right here. It's let's bust the myth that Bitcoin is polluting our planet. Mining is one of the most sustainable industries globally and will boost the clean energy transition. Now, I want you to listen to this clip very quickly, because what you're going to hear is you're going to hear this gentleman talk about how they can use Bitcoin mining to create clean energy in industries that do not currently have it by using the waste for Bitcoin mining, like in the oil industry has been talked about before. Take a listen.
Which is much better than having consumers go through demand response mechanisms where when you want to run your air conditioning, guess what, you can't because there isn't enough power because the demand response is shutting it off, or they're shutting off your dryer, or they're shutting off your cooktop. Better to take an industry like Bitcoin miners, where we can shut down gladly for an hour, 2 hours when it's needed by the grid, and then provide also a huge incentive to the renewable energy industry, where otherwise they don't have incentives to build out more capacity. We generate more power in this country, more energy than we need and consume. How do you incentivize an industry to build more solar and more wind energy, more hydro, when there aren't customers for it? And that's what Bitcoin miners can do. We can be a huge customer for those industries and provide them with the load consumption that they need to be profitable and operate profitably, so that when the grid does need that peak generation capacity, it's available at the flip of a switch.
I understand that, and he's talking about, look, you know, you could really ignite the renewable, sustainable energy like solar, wind, and things of that nature. I get that you could provide a base, a customer base as a Bitcoin miner for those industries. But just as a reminder here, and this is not to be combative, but miners are not necessary in this day and age to actually run a blockchain. This is why Chris Larsen has made his real effort, or has made a real effort here to try to get Bitcoin to make that tough decision to really move from proof of work to proof of stake. We'll keep you posted. Eleanor Terrett from Fox Business News is digging deeper into what's going on, ladies and gentlemen, asking the tough questions that we know need to be asked. She says Clayton, who now serves as an advisor for Fireblocks, a $2 billion crypto custody firm, also shared that he now believes government agencies should not take a one-size-fits-all approach to crypto regulation. All of a sudden, he believes that. I tell you, but she asked an even tougher question right here. She says, this is a screenshot taken from SEC Gov's post-employment reference guide as ethics reminder. It would be interesting to know whether Jay Clayton and William Hinman consulted the ethics office before going into their respective crypto-related post-careers. Well, I tell you, look, first of all, I am very grateful for Charles Gasparino, Eleanor Terrett, all the coverage, Liz Clayman, that everyone has done at Fox Business, and Rosalind Layton as well at Forbes, to stay on top of this story. And these are the questions now that really deserve an answer. And there is no reason why they can't answer these questions, because they don't affect the SEC versus Ripple court case to get a yes or a no. And we need that answer. Right now, I want to take you back to January 12, 2020 here. Shout out to Bank XRP for saving this clip. This is the fireside chat with Gary Cohn, who was actually a economic advisor to the past presidential administration, and Glenn Hutchins, who is invested in the blockchain space, former president of the New York Federal Reserve, part owner of AT&T and the Boston Celtics, sitting with Jay Clayton, who was the SEC chair at the time. I'm going to spin this clip and set the tone, because it is going to feel like the things they are talking about feel much clearer to me knowing what is happening now, but they were saying it then. Take a quick listen. Let's start right in this spot. Right, 1 second here. This is why I lay these videos out, so I can really look unprepared by the time I get on here in front of you guys. Let's start right here.
Anonymized security. But anyway, so that's a straightforward, easy thing to do. It should be done. And we just got to get...
I'm on the wrong marker right there. Here we go. 1 second. I have done this before, ladies and gentlemen. Here we go.
Them go away, and you can get real-time information, not the information that was sent to the warehouse. So there's just enormous amount of applications for this, and whether it's digitizing securities, moving securities, fragmenting securities, it just has enormous use. So
he's talking about using blockchain to be able to settle securities, fragmented securities, all of that, right? Well, very quickly, let me give you this, because this is very important. Take a look at this.
Increasing pace of advancements in technology, including distributed ledger technology.
Now, this is the SEC voting at the Sunshine Act meeting, and it was public, which it hasn't been public, back in February of this year. And every one of them are going to vote yes on using distributed ledger technology. And even Caroline Crenshaw is about to tell you, and such efforts in DLT are already being made. Take a listen.
Further shortening the standard settlement cycle in the near future may be both desirable and feasible. Indeed, some such efforts are already underway.
They're already underway with distributed ledger technology used to do exactly what Gary Cohn said. But there's so much more. Don't you go anywhere. Check it out.
Today, we do have those technologies not only to shorten the settlement cycle to 1 day, but also to shorten key elements of what's called the clearing process, that which goes on before. Also, I think rather important, it requires 3 important steps in that clearing process. The back office plumbing process of affirmation, i.e. to fully automate transaction processing. Again, lowering risks in the system. Now, separately, the Commission is also issuing a robust request for comment around areas to consider with respect to potentially achieving same-day net settlement in the future. Net, because it's still netting positions, but possibly moving the money, moving the securities in the evening or end of day. The technology actually exists today, not just for same-day affirmation, confirmation, and allocations, but even for same-day settlement. How do commissioners vote on the division's recommendations to amend the Securities Exchange Act on clearing and settling?
Yes. Yes. Yes.
Yes. The recommendation is approved unanimously.
And there you have it, ladies and gentlemen. So they are actually voting on the things back in January 2 years ago that Gary Cohn was talking about, using blockchain and distributed ledger technology to settle securities and fractionalize securities. They just voted in February of this year to do that, but continue to listen as Glenn Hutchins now shifts the conversation to talk about the difference between crypto and stable coins, digital currencies themselves, right? They're very important because of what is getting ready to happen this year, according to Senator Gillibrand. Take a listen.
I am very, very bullish on what it's going to do to the industry. And this goes back to where we started, how the SEC, the CFTC, the Fed, they're going to have to understand that this is going to happen with or without you, and it's better off to happen with you.
Okay, a couple things. All that is accurate. Let me just give us a different, slightly different perspective on it.
By the way, there's only one way it can happen with or without the SEC, and that's the United States Treasury and FSOC, baby, courtesy of Dodd-Frank. And guess who helped author that? Michael S. Barr, former Ripple advisor and Treasury official who just got the green light from the Senate Banking Committee that he is going to take that seat.
Well, let's talk first about digital currencies, and let's talk about crypto stuff. Digital currencies today, roughly 92% of all currencies in the world is digitized.
You're talking about fiat versus crypto?
Just currency.
All right, so break them up though. So look, I totally believe in digital fiat.
Yeah, that's
so digital dollars, digital yen, digital euros. I don't. Those aren't crypto to me. That's right. That's digital fiat. So I just want everyone to understand that we're probably in more agreement.
No, not agreement. I'm just saying. Okay. I'm sort of dividing these two things apart, just like you just did. So the first thing you have to understand is that moving to a digital currency is a very straightforward thing to do. People call them, and the two things can interact, of course. Some people call them stable coins. Some people call them, the Chinese are working on their own. Taking that thing on paper and turning it into a digitized thing is a very straightforward thing to do. And today, the vast majority of money in the world is already digital because it's just electronic entries in banks and central banks. So the notion that it's some big revolutionary thing, I can take 8%. By the way, Ken Rogoff's book, The End of Cash, says that the 80 to 90% of U.S. $100 bills are used in organized crime and tax evasion. So the thing that's most useful to the bad guys is cash. It's the ultimate sort of anonymized security. But anyway, so that's a straightforward, easy thing to do. It should be done, and we just got to get there.
Agree.
Right. That's easy.
Amen.
And we are there, ladies and gentlemen, and we're going to take you there, by the way. Take a look at this. Senator Gillibrand, just last weekend, saying, none of this is a coincidence at my house. And she says this.
I think we could do a stablecoin bill between now and the end of the year because
it's critical. We could do a stablecoin bill now between now and the end of the year with Senator Pat Toomey herself and Senator Loomis and Patrick McHenry from the House of Representatives on that panel. That is getting done. I bet you I just see it coming. So here we go. This is BlackRock's Larry Fink. And if you're confused, BlackRock is $10 trillion in assets under management, ladies and gentlemen. $10 trillion as of January this year. It is where the government looks to when they're in trouble to BlackRock. They're the ones that bought up all the property in the last crisis. And they'll probably be buying it up in this next one. But here we see BlackRock's Larry Fink say a fantastic idea, a basket of a world currency, talking about digitizing money. And listen to what he says here. And there's a lot in here.
Well, I start out with a foundation. There is a great need for digitization of currency. There is no need for hard currency anymore. And then whether that is the hegemony of the dollar or the hegemony of three different vehicles, we'll see how the market all.
Okay, very quickly. Hegemony whether that means the leadership of the dollar or whether it's three other vehicles. Well, what would that be? The US dollar, the euro, and the Chinese yuan, all competing for the role that the US dollar serves today? Isn't he leaning in that comment to suggest that we're moving from a one global reserve currency to a multi-asset-backed, multipolar asset-backed system? I think the answer is yes.
plays out. I mean, some of the suggestions that you just brought up is more political, and I'm trying to focus on the social need of why we need digital currency. So I'm a very large believer of a stable coin type of currency, not a Bitcoin, a stable coin that is based on a currency, or each country or a country creates a digitization of that.
You could have a basket of currencies, right?
Or you could create, that would be a fantastic vehicle, a basket of a world currency.
You hear what he just said? Now, this guy has got $10 trillion of assets under management, and he just so happens to be hip to a stable coin and digitizing fiat money. As Senator Gillibrand says, it is critical and we can get a stablecoin bill done this year.
That could work out too, but obviously that represents a lot of issues. What are the role of banking in that? Who plays that role? Who knows who's doing all the transactions?
Well, the Treasury, that's who knows, Larry. We're not so confused, and you're not either.
We have a lot of privacy issues, so I'm not trying to suggest these are easy solutions, but I do believe the backdrop of what is going on with Ukraine and Russia, and the role of the US dollar and sanctions, I think it's just going to accelerate the conversation of the utilization of some form of digitization of a currency. So
there you have it. So then he's talking about the Russia-Ukraine conflict, which we have covered here in the respect of Russia and China have developed a system to avoid SWIFT, international financial system. That is very real. And we know the BRICS coalition as well. As an alternative to SWIFT, Russia established its own payment system called SPFS. It had set up its card system, MER, in 2015. This wasn't decided 2 weeks ago, ladies and gentlemen, to facilitate domestic as well as international transactions. The BRICS coalition, which is Brazil, Russia, India, China, and South Africa, ministers have agreed on the importance of cooperation in efforts to steady the current economic situation, the Russian finance ministry said. I tell you, they said the current crisis is man-made and the BRICS countries have all the necessary tools to mitigate its consequences for their economies and global economy as a whole. So that is exactly what Larry Fink is talking about. And we have said that here, that Russian conflict with Ukraine could be the very catalyst that begins to break the monetary system as it is and fractionalize it, with the BRICS coalition having their own system, the Euro having their own system, and I'm sure that you'd see the US have their own system. And then all of these systems settle with a bridge currency in between them, really isolating the spillover shocks from each country's individual economy. This is where it gets most profound right here, ladies and gentlemen. I tell you this is absolutely remarkable right here. This is Jerome Powell, and he is saying, and really echoing exactly what just got said by Larry Fink, rapid changes are taking place in the global monetary system that may affect the international role of the US dollar. A US central bank digital currency is being examined to help the US dollar's international standing. Well.
Looking forward, rapid changes are taking place in the global monetary system that may affect the international role of the dollar in the future. Most major economies already have or are in the process of developing instant 24/7 payments. Our own FedNow service will be coming online in 2023. And in light of the tremendous growth in crypto assets and stablecoins, we are examining whether a U.S. central bank digital currency would improve upon what is an already safe and efficient domestic payment system. As our white paper on this topic notes, a U.S. CBDC could also potentially help maintain the dollar's international standing.
Remarkable clip right there from Jerome Powell, acknowledging that rapid changes are taking place in the global monetary system that may affect the international role of the U.S. dollar. Now, this is why I believe the stablecoin bill is so important. FedNow is coming online in 2023. I'm not saying that FedNow is going to use XRP to bridge and settle. What I'm telling you is what the hell are they going to use? That's the question. And I believe it will be digital stable coins. Probably from each bank having their own digital stable coin even. And no one wants to hold each other's digital stable coin. And if not, maybe it just ends up being the USD coin, which is already a highly regulated stable coin, which is also about to launch a euro stable coin under the same regulatory level and measures and compliance. That is what we're looking at, ladies and gentlemen. And this, when you get to the tune of tying in, the FedNow is the domestic side of the liquidity pool. And when you get that right, you can then use that liquidity pool for the international cross-border liquidity pool. And when you do, I believe Gary Gensler gives away the answer and says that that stable coin needs to be a stable value. And maybe it ends up being a global stable coin like XRP or XLM, according to the World Bank.
But to go between Tanzania and Nigeria, you need somebody to bear some counterparty risk that the ledgers both move and are adjusted at the same time. And usually it's a bank that is in both countries. You could use blockchain, but the current thinking is you need a bridge currency in between, and that bridge could be a stable value that's backed by the US dollar or the euro.
That bridge could be a stable value backed by the US dollar or the euro.
It could be a currency even like Ripple has an alternative. It's just piloted in May, so it's not yet up in any enterprise-wide level. You could use blockchain, but the current thinking is you need a bridge currency in between, and that bridge could be a stable value.
That bridge could be a stable value. Listen, I've never pretended to know when they're going to do it, but I absolutely know in my heart of hearts, they're going to do it. Not financial advice from me. That's my digital perspectives. I'll catch all of you on the next one.